Financial System Explained: How Money Flows in the Economy. Have you ever wondered how money flows in an economy? Who connects savers, investors, and businesses together? That's the role of the financial system, the backbone of any modern economy. In this video, we'll understand what a financial system is, how it works, its key components, and why it's so important for growth. A financial system is a network of institutions, markets, and instruments that help in the flow of funds from people who have money, the savers, to those who need money, the borrowers. It plays a vital role in ensuring that every rupee saved finds its way into productive use, whether it's building infrastructure, expanding businesses, or funding innovation. Let's look at the 5 main components of a financial system. 1. Financial institutions. These are the intermediaries like banks, NBFCs, insurance companies, and mutual funds. They collect savings from individuals and lend or invest them to earn returns. 2. Financial markets. Markets where financial assets like shares, bonds, and currencies are traded. Examples include the stock market, bond market, and money market. They help investors buy and sell assets easily, creating liquidity. 3. Financial instruments. These are the tools used for investment and borrowing, like equity shares, debentures, bonds, and derivatives. Each instrument has its own level of risk and return. 4. Financial services. These are the services that support financial transactions such as banking, insurance, investment advice, and mutual fund management. 5. Financial regulators. To ensure stability and trust, we have regulatory bodies like RBI, regulates banks and monetary policy, SEBI, regulates stock markets, IRDAI, regulates insurance, PFRDA, regulates pension funds. The financial system performs several key functions: mobilizing savings, collects savings from individuals and channels them to productive investments; providing credit, enables businesses and governments to borrow and grow; facilitating payments, makes money transfer and settlement easy through modern banking; risk management, helps in managing risks through insurance and derivatives; price discovery, markets help determine the fair price of financial assets. A well-developed financial system is essential for economic growth, efficient capital formation, employment generation, financial stability, and promoting foreign investment. Without a strong financial system, economies struggle to allocate resources efficiently. In short, the financial system acts as the circulatory system of the economy, ensuring money flows smoothly and productively. If you found this video helpful, don't forget to like, share, and subscribe for more finance explanations made simple.